Now I would like to invite Ms. Maheen Rahman to the stage. Ms. Rahman is the CEO of Alphala Investment Management and has over 19 years of experience in investment banking, research and asset management. She assumed the stewardship of Alphala in 2013 and she has spanned a brilliant career. She has also been featured in Fortune 2015 edition of 40 Under 40 Rising Female Executives. I'm sure that we are all excited to share her vision for South Asia and the role which Pakistan is going to play in the region.
Thank you. Thank you to the team at Berkeley for giving me the opportunity to speak here. So how many of you, just out of curiosity, have been to Pakistan or are from Pakistan in the room? How many of you would like to go to Pakistan and see what's happening over there? Okay, so I'm going to talk about Pakistan from a slightly different perspective than what you've been hearing this morning, and that's from an actual investor's perspective. And kind of digging a little bit deeper and seeing what's happening beyond the rules, the regulation, the politics, the government, and seeing what is the actual money that you can make in a country like Pakistan. Because I think we've heard a lot about what's going on in South Asia and how the entire region is opening up. But from an investor's perspective, and I represent Alphala Investments, which is based out of Karachi, but we do have our roots in Abu Dhabi, and His Highness Sheikh Nahyan Mubarak Al Nahyan happens to be our major shareholder. So he's been one of the biggest proponents of investing in Pakistan over the last 20 years or so. And I'm just going to highlight a little bit here of what's really out there in a deeper way. So just, and I always think that, you look at the stock market as a barometer for what's going on in the country. And at the moment, this is a 10-year history of the Karachi Stock Exchange, the KC 100 index, which has delivered almost 12% CAGR over 10 years in dollar terms. And you compare that with the MSCI Emerging Markets Index, which has given just 4% over the same time period. And this spans obviously 3 different governments that we have seen. So you can see the KC 100 big ramp up that started right after 2008, 2009, touched a high of 52,000 2 years ago, and then corrected fairly sharply, almost 46% correction after touching that high. And at the peak point, I think the returns were up to something like 30% in dollar terms on a 10-year CAGR basis. So clearly there is significant return to be had in the country as long as you time the market cycles properly. So what really drives this? So with most stock markets, it's usually greed and fear. And I think when we look at Pakistan right now, we are on the fear spectrum more than the greed spectrum. So let's look at what drives both of those things. So if I just pick up the greed cycle, it's an issue with the presentation? Yeah. Okay, so if I look at the overall greed cycle, what's going on? So you have a country which 220 million in population. You have almost 70% below the age of 30. You have a demographic which is trending very heavily towards tech. And you have a demographic that is slowly coming into its own in terms of actual consumer demand. So the economy is very much demand driven. So when we talk about greed and what drives us as investors to look at this market, it really is coming out of the demographics. And we've been covering the market now for about 15 years. And what we have learned in the course of those 15 years is that corporations really fundamentally have changed. What you had as a cement company 10, 15 years ago is no longer a cement company. It doesn't just do building materials. It's actually transitioned into real estate. It's transitioned into textiles. It's transitioned into automobile manufacturing, and so on and so forth. You have companies such as Engro, which 10 years ago were just fertilizer companies. But today, they invest in energy, they invest in infrastructure, they invest in food, they invest in power generation, and they're looking at mining and tech as well. Similarly, if I look at the House of Habib is a massive conglomerate, one of the largest business families in Pakistan, started out as jute manufacturers. But today they're in banking, they're in auto manufacturing, they're again in energy, they're in sugar, ceramics, education. So, the nature of corporations in Pakistan over the last 10 years or so have really shifted. And that's what has driven the overall valuations in Pakistan. It's what's driven the earnings cycle. And that's what we're seeing really translate into much more aggressive valuations and aggressive returns is what we are looking at over the next 10 years or so. I think the other thing that's really interesting about Pakistan is the tech economy. 6-7 years ago, nobody was talking much about tech in Pakistan. Today, everybody's talking about tech in Pakistan. You have had an influx of venture capitalist money come into the country in a number of these places. If I talk about Daraz is one of the largest e-commerce sites in Pakistan and in Asia. If I look at fintech, you have Ant Financial, which recently acquired Telenor Microfinance to set up a payments gateway in Pakistan, and is now looking into filtering in blockchain technologies. And it will be the first in South Asia to actually do so on this scale. You have Zameen.com, which it started out as an online marketplace for real estate, and is now really transitioned into a mass kind of real estate company. I think the last raise that they did was well over $30 million. So you do have a very bubbling knowledge economy. If you just look at some of the statistics, you have 164 million mobile phone users. You have 74 million smartphone users. You have 76 million internet users, and that's growing at 1 million a month almost at this stage. You have 756 million e-banking transactions that happened last year in 2019. 38 million mobile wallets, and at the same time, it's probably the third largest mobile payment system. Something going on in the tech space, which is very exciting to look at from a VC and from a PE perspective. If I go further, let's talk about the fear. So what's the first thing that comes to mind when you think of Pakistan as an economy to invest in? You just shout it out. Volatility. What else? Currency fluctuations. Instability. Right? So here's the fear. Here's the fear is what prevents investors from looking at Pakistan in a more meaningful way, as they have been doing in countries such as India, which has been attracting FDI for well over 3 decades now. So when you look at macro stability, this is where the issue arises, right? So you look at the fact that Pakistan is very prone to boom-bust cycles that go in, say, 5 years, you do really well, you build up to a growth rate of 6% or so, and then all of a sudden it begins to come down. And that really is, I think, the crux of the problem. And somebody mentioned currency fluctuation, and that's really it. So you have stable currency periods, and then all of a sudden you have very sharp depreciations. And why is that? So that really comes from the economic cycle that the country has been following. And if you want to understand Pakistan, you start with the external account. You start with the current account. And as soon as you begin to see pressure on that current account, that's really when you know that unless policymakers step in and do what is necessary in terms of whether it is free-floating the rupee or whether it is raising interest rates, if that happens on time, then you're in a better position to smooth out those cycles. But fundamentally, the problem is inherent that there is not enough export going on to really support overall growth at a certain level, and at the same time, on the fiscal front, the tax collection needs to be far higher. You have a country of 220 million people, but guess how many people actually file taxes? Take a guess. 100 people file taxes? 100 million file taxes. So it's 1.8 million people only that actually file taxes. That was in 2018. 2019, I think the number was close to 2.2 million people. So here is where you have the weak points that you, and anyone who comes to invest in Pakistan has to recognize those weak points. But having said that, it hasn't stopped the return profile of the country. So when I go back to that chart on the PSX, you can see that over the actual 10-year period, the return was still over 12%. If I look at private companies in Pakistan, Unilever, for example, has been operating out of Pakistan for 30 years. I think they've had one of the most prolific runs in terms of profitability over this time period, to the point where they refused to list their shares on the exchange, saying that there was too much value to be given away by actually listing. So the actual buyback that they did on the PSX was at a price that was the highest they had ever bought back their shares anywhere in the world. So that's the kind of consumer power that you can see in an economy of this size and this kind of demographic. So on the currency side, yes, those are those issues. You must look out for them as investors, but I think over the long term, I think the currency average depreciation, if I look at it over a 20-25 year period, has only been about 5-6%. So you have to really time the cycles, but on the long term, you're fairly all right on that. Obviously, one other thing which no one mentioned here, but I think we got it a little bit in instability, is the politics. You're sitting with your neighbors, India on one side, China on one side, Afghanistan on one side, Iran on one side. So clearly the geopolitical framework there is always going to come into play when you talk about Pakistan. But here's where I believe Pakistan has that advantage. One, you're strategically positioned to be a trade energy corridor, which was one reason why China was so interested in having the CPEC corridor, which is still ongoing, which was mentioned by an earlier speaker. So that trade and energy route is very critical, I would say, to the region in itself. But naturally, you do have a situation where internal and external politics can impact the country. But what we have seen so far, at least with the current PTI, Imran Khan-led government and governments in the past as well, is that the focus really needs to be on domestic economic reform. And the policy framework that we've seen on the international front has been encouraging, certainly better than the last government, I would say. So they've had a number of foreign policy wins, particularly here in the UAE as well, and across the Middle East, and recently with the United States as well. China has always been a long-time partner and friend, and I think the region only has to gain and benefit by all these South Asian countries really getting beyond the politics and becoming economically much more interlinked. Okay, so why Pakistan now? Well, one, it's an incredibly cheap market. And I'm not just talking about that from the perspective of the stock market. I would say if you look at all asset classes in Pakistan, very, very cheap. Whether we are looking at private sector FDI or whether we are looking at the capital markets or the stock markets or even the bond markets, the valuations, as you can see, on Pakistan on average tends to trade around 9 times earnings. But you have, at this point in time, 6.6 price earnings ratio. And this is on the stock market. So an even bigger discount would be applied to private sector deals. So just looking at that from a median average, or even from the region, you've got India at almost 20 times PE, you've got the Philippines at 16, you've got Malaysia at 16, you've got Indonesia at 15, and Thailand at 13. So really quite low and quite discounted, I would say, at this point in time. So I would say now is a good time to start evaluating those opportunities. Also, I think the overall stability, and if I just come to this graph in a minute, but why now specifically? It's been through a 2-year, very heavy economic adjustment. In 2017, you had the rupee begin to depreciate, and that was due to pressures, as I mentioned on the current account earlier. But as of now, you have interest rates that have stabilized at about 13.5%. You have the currency that has depreciated about 50% in 2 years, and now it's been stable for the last 6-7 months. You have foreign exchange reserves that have built up quite substantially, and you have a carry trade in short-term debt securities that has crossed almost $3+ billion in just, I would say, 6 months. So you have had that inflow come in now, and what has that resulted in? It certainly resulted, one, in an uptick of the market. You can see that the market came down very significantly, all the way down in August, where it touched 28,000 almost, and then a sudden sharp ramp up. So in 3 months, the market actually delivered a 58% return in dollar terms in just 3 months. So if you had timed that cycle, you'd be sitting pretty happy, at this point in time. And that's something that we are now seeing filter over into the real economy as well. So I always look at the stock market as a barometer for what's going on underneath. And so now what are you seeing? You're seeing that there's a downturn in earnings that had come through on all sort of corporates and manufacturing units, etc. That's now bottoming out. So you're probably sitting at the bottom of the U when it comes to an economic recovery in Pakistan, which will most likely at least follow through for the next 5 or 6 years. So that way, timing-wise, you're coming in after the economic crisis, you're at the point of stability, and now you're looking towards economic growth over the next 5 or 6 years or so. So really, I think timing-wise, this is probably a good time to start looking at the country from an investor's perspective. That was the stock market. Look at the bond markets. And here, look at this chart on this side. This is the 3-month Treasury bill yield. And that's the yield on government securities on a short-term paper of about 3 months or so. The red line, that's the average. So the average is something like 8%. Right now, the short-term bond is trading at 13.5%. So just in terms of carry trade, and that's why you've seen that $3 billion plus come into the market, is simply because that carry trade combined with a stable currency has begun to see inflows coming on that side as well. The long-term bond market is still sitting fairly close to its long-term average of about 11%. It did spike as high as about 13.7, but that was too good an opportunity, I think, for most banks and asset managers in Pakistan not to pick up, and so that demand has pushed that back down to the long-term average. But the opportunity certainly on the short term still exists at that point in time. When we talk about private capital and we think about why should we invest in a place like Pakistan, and where are all the venture caps and private equity and even the big business groups, what are they looking at? So I've got 2 charts here. I've got one on the consumer side, and I've got one on the industrial side. So when we look at Pakistan, so I think it's been ranked the #1 tourism destination by CNN, by Condé Nast, by a number of other websites. So travel and tourism, I think, is going to end up being the #1 zone where we're going to see investment, both domestic and foreign, come in over the next 10 years or so. And here's where hospitality companies can look to get involved, anyone in the hotel business, in the restaurant business, or in venture tourism and travel. I think certainly that's something that Pakistan has an edge on right now. We talk about education, in particular ed tech or even health tech. I think 2 big areas that we're seeing a lot of work happening, both on the hospital and private equity side, as well as on the VC side in the tech space. Retail, it's a consumer market, it's a no-brainer. There's young people, they have money to spend. Retail is really, I think it's already seen a massive boom, and I think that's just set to continue. Property and housing, just the fact that you have a demographic where 100 million or 120 million people are about to enter a stage of their life where they start to become homeowners or home renters, the demand for housing is only set to go up over the next 10 to 15 years. And then on the other side, in terms of the industrial capacity that needs to be built, energy, power distribution. So Pakistan is actually energy surplus at this point in time. I think where the gap comes in is on the distribution. So that's where we see significant losses in terms of actually distributing that power out to where it's needed. But at this point in time, the energy capacity is already there, and the gaps exist on the distribution front. Mining minerals, I think we recently extracted the first coal that was done by Engro, Sindh coal, which I believe are, I think, one of the 3rd or 4th largest coal reserves in Asia, and that mining has just commenced. There are also significant gold reserves. We're talking about Balochistan as well as other many minerals that I think do need to be invested in and looked at over here. Logistics, I'm not just talking about logistics on warehousing, but supply chains, cold chains, all those areas will see investment over the next 5 years. Agri, I think we had a gentleman here talking about agri. Agri-tech, yes, for sure, but even bricks and mortar, I think, would benefit. Specifically, if you understand the agricultural market, it's the 5th largest producer of rice in the world. It's also the 5th largest producer of dairy in terms of milk in the world as well. What we lack, though, is getting that produce from farm to market. And here's where almost 50–55% of produce produced in Pakistan actually ends up being wasted. So you can just imagine the degree that you can build into if we just had that investment on the logistics side or the cold chain side in terms of agri-storage and agri-transportation. Finally, finance, insurance. It's a country with 55 million bank accounts. Financial inclusion, however, is low, but it is increasing rapidly with the use of fintech. I pointed out earlier in terms of mobile wallets and in mobile transactions. And as the younger population grows up, enters the workforce, I think more and more they will prefer to use digital banking channels, branchless banking channels, as opposed to regular bricks and mortar banks. So certainly on the fintech side, which is probably my Ant Financial, has made that investment, but we are seeing the same kind of trends on other digital platforms. OneLoad is a company that specializes in digital payments, recently got a banking license by the State Bank, and a big investment from the IFC on this front as well. So, these are what I consider to be the main building blocks of investment for the next 5 years or so. We did recently partner. We are Al-Falah, we are Karachi-based, but we do have our roots here, so we recently decided to take advantage of some of the timing on the Pakistan market, and we launched a fund actually out of Dubai with our partners Azimuth over here, and that's exclusively for the stock market. But we are looking at private capital as well. We are looking at the bond markets as well. So I'd be happy to address any questions that any of you have. I'm here for another hour or so. But it's been great to be here, great to meet with all of you, and I do hope that you look at the country in a slightly different light. Thank you very much.